Yes, so I was with the president of Ecuador, Panama, Honduras, Guatemala a couple of days ago. I've got 30 other presidents in line. Right now, there is so much interest, and because of how successful El Salvador has been.
All right, welcome back everybody to Altcoin Daily. My name's Austin. In today's video, I want to share with you the latest news involving Bitcoin, involving Ethereum, involving higher cap altcoins, lower cap altcoins, and of course, a recent clip potentially showing where this crypto market is headed next. If you're interested in making money with cryptocurrency, click subscribe. We drop a video every single day demystifying this cryptocurrency market. First piece of news involving the future of where this space is headed. Mastercard has just tapped back to offer crypto for its payments network. So soon merchants within Mastercard's payments network, which is huge, will be able to 1, accept crypto, and 2, offer crypto rewards. Wow. This is adoption for its millions and millions of merchants on the Mastercard network. Financial services giant Mastercard is set to announce that thousands of banks and millions of merchants on its payments network will soon be able to integrate crypto right into its products. To do so, Mastercard is partnering with digital asset firm Bakkt, which will provide the custody services for the merchants and institutions who sign up. Let this show you that adoption for crypto is not slowing down right now, adoption's speeding up. And specifically what this means for all merchants and institutions in the Mastercard payments network. The Mastercard deal will bring a plethora of crypto services to the Mastercard payments network, including Bitcoin wallets, the ability to earn crypto rewards on crypto-enabled credit and debit cards, and participation in select airline or hotel loyalty programs where rewards can be converted into Bitcoin. And what this means to you as an average Bitcoin hodler is that every single person in this network, the Mastercard network, who chooses to opt in, will have at minimum a Bitcoin wallet right at their fingertips. Let me know what you think down below in the comment section, but let's keep moving. Oh, and one more thing before we get to altcoins, I do want to point out the data, the sheer amount of interest from traditional finance we are seeing right now for Bitcoin. Bitcoin open interest in CME futures contracts, and these are the Bitcoin futures contracts we've had for years now. The open interest for that has increased by over $3.95 billion in just the course of October alone. And of course, this is in part driven by the introduction of the new Bitcoin futures ETF products that were just listed on the NASDAQ. So obviously staggering. Basically, no matter how you cut it, rising open interest is generally a bullish factor in derivatives. And yes, we can see that right here. Rising open interest led us to that last 65K peak. We're seeing rising open interest again. Just something to think about. Next piece of news for altcoin stacks. BitGo, which provides institutional custody for crypto, has just integrated stacks, bringing Bitcoin DeFi to institutions. As we know, Stacks is bridging decentralized finance and the Bitcoin network, and now Bitcoin users have access to BTC yield directly through the XTX tokens. If you believe in Bitcoin, if you hold the STX token, this is very bullish news. And beginning today, Monday, BitGo will offer this to their institutional clients. This is through a process known as stacking, where STX token holders can earn BTC rewards directly in their wallets. And for perspective, we know DeFi on Ethereum, right? That's lending and borrowing, etc., without a middleman. Well, Stacks offers the same basic thing, but a little different. Unlike other yield-earning services, BTC rewards generated through stacking are not based on a lending auction, which means STX token holders do not need to lend their funds. Rather, Stacks claims that the yield is derived directly from its staking mechanism, which is connected to the Bitcoin blockchain. And I guess my final question would be, well, why not just use Ethereum? We already have DeFi on Ethereum, Solana, Polkadot, etc. Why in this case DeFi on Bitcoin with Stacks? Well, BitGo co-founder and CEO Mike Belshi said his company integrated with Stacks because financial institutions have been looking for a secure access point to the DeFi markets. In a direct quote, By onboarding support for Stacks and STX, we are giving our clients what they want without the need for expensive infrastructure investments. Interesting. So I guess they're saying it's just easier at the moment to stick with Bitcoin and grow out the Bitcoin DeFi ecosystem. Next piece of news for Ethereum adoption, Nigeria's Naira CBDC goes live. Their CBDC was developed by fintech company Bit, whose digital currency management system is also behind the Eastern Caribbean Central Bank's CBDC as well. Either way, Nigeria has said yes. Here are the details. Number 1, this was designed to complement Nigeria's physical currency, not replace it. Number 2, every single Nigerian is now getting a crypto wallet. Actually, there is 2 different recommended ways for interacting with their CBDC. Number 1, there is their speed wallet for the common person, and there's also the merchant wallet for merchants. They're both available to download now on the Google and Apple app stores. And also, why this was so interesting to me is because Nigeria has did a little bit of a 180 in regards to cryptocurrency. Nigeria's government and central bank struggled with the rise of cryptocurrency in the country, leading to a ban on crypto transactions within the banking sector just this last February. 4 months later, plans were announced to introduce their own CBDC. So really understand what just happened here with Nigeria. Earlier this year, the government banned cryptocurrency transactions. Then somewhere along the line, they realized they don't want to fall behind with the rest of the world, and they're now recommending that every single one of their citizens download a cryptocurrency wallet for their own CBDC. Things are moving quickly. And next up, let's talk about this recent interview with Brock Pierce, who is a child star turned notable investor, sort of a thought leader in the cryptocurrency space, I guess. Is it going well in El Salvador right now? And which country is the next El Salvador? Watch this. The domino effect is happening.
What we have seen is El Salvador did make Bitcoin legal tender.
How's that working out?
In less than 1 month from the day that it started, which was September 7th or Bitcoin Day, over 50% of the population of the country had downloaded a Bitcoin wallet. So it's exceeded my wildest expectations, but what you pointed out is interesting. The primary currency in El Salvador is the US dollar. So there was no central bank. They don't have the ability to issue their own money, similar to like Ecuador and Panama, in the way they see this as all this upside.
Do you now have, though, a case model that you could present to other countries and say, look, it works here, it could work there as well?
Yes, so I was with the president of Ecuador, Panama, Honduras, Guatemala a couple of days ago. I've got 30 other presidents in line. Right now, there is so much interest, and because of how successful El Salvador has been, people are really curious. I'm not there to tell them what to do, but I'm giving them the information because the data doesn't lie.
Now, these are itsy-bitsy economies compared to the United States or other European countries. Is there any transfer, or is it just unique to the size of these countries, the small size of these economies?
Well, first movers are typically those that are going to be more nimble and where the need is greater. Obviously, the bigger you get, you don't need to be first. You have the benefit of being able to watch and see how it's worked elsewhere, and then you get the pleasure of going, oh, this really works, let's do something. It's the smaller places that benefit most from, making big moves.
Have you seen any interest at all on the part of the Fed?
So, I was in the Senate yesterday, and I'm constantly in conversations with various members of, our elected officials, our civil servants, our regulators, legislators, everybody. And there's genuine interest. The real issue that I see is that most people just don't know enough. And so the main thing that I'm tackling is just education, education, and education, because the more informed everyone is, the more sensible the decisions they'll make that are ultimately, this is our future. There is a future economy emerging. There is a new economy emerging. And our future is going to be impacted by the decisions we make. And I pray we make good decisions for our collective best interest.
All right. Hey, I want to believe. Give me your thoughts down below. Let's keep moving. Quick piece of news for altcoin Chainlink from the other day. Ernst & Young is sponsoring Chainlink's Fall 2021 hackathon. So this is a huge sign of support from Ernst & Young. EY is officially supporting the Chainlink Fall hackathon. There's only 1 day left, so sign up now to compete for over $500,000 in prizes and the opportunity to pitch to VCs. Now, it's already too late. Sign-ups are done. But according to Chainlink, This is your chance to learn how to build dApps with the best tools alongside top industry builders. And in my opinion, how this affects you and me as hodlers, you always got to pay attention to the whispers, meaning what is happening in this cryptocurrency space, who is supporting who, and which protocols are gaining acceptance. Just something to keep on the radar. Next piece of news for altcoin IOTA. IOTA launches zero-fee smart contracts in their new beta. So as we know, IOTA is an open source cryptocurrency and distributed ledger. It is technically not a blockchain. It's a tangle, but it is distributed ledger technology where smart contracts, dApps, can be built on. And what makes these smart contracts special is this. As recently reported, the beta includes an Ethereum virtual machine EVM, making ERC20 tokens interoperable with the platform. Furthermore, smart contracts can now be written in Solidity, Ethereum's native programming language, anchored in IOTA's Tangle language. And when we say cheaper fees, I guess, notably, all smart contracts with IOTA, all smart contracts allow their creators to set their own execution fees, allowing different chains to compete in driving down fees. To me, the true test is going to be, are we seeing killer dApps now going to be built on IOTA? Will we see it? Time will tell. But that is the video. If you haven't already, How to Pay Zero Taxes, great interview with friend of the channel, Brian Harrington, linked down below. Check it out. But like always, see you tomorrow.